Are you worried about the stock market potentially crashing soon? With recent economic fluctuations, many investors are on edge. But what signs should you be watching for in 2025? In today's video, we'll explore key indicators of a possible market crash and provide strategies to safeguard your investments if that happens. Let's start by examining the economic indicators that could signal a looming crash. Here are the top 5 signs to watch out for in 2025. Rising inflation. Inflation rates exceeding 4 to 5% can erode purchasing power and encourage the Federal Reserve to increase interest rates. Keep an eye on Consumer Price Index (CPI) reports which track inflation trends. High inflation affects everything from groceries to housing costs, and prolonged inflation can lead to a slower economy. High market valuations. The Shiller PE ratio, currently hovering above 30, is a strong indicator of overvaluation. Historically, this ratio has signaled market corrections when it exceeds historical averages. If you notice the ratio continuing to rise, it might be a sign that the market is due for a pullback. Third, an inverted yield curve occurs when short-term interest rates exceed long-term rates. This scenario has historically predicted impending recessions. Keep an eye on the spread between 10-year and 2-year Treasury bonds. If it narrows significantly or inverts, it's time to reassess your investments. Increased unemployment rates. When unemployment rises above 5%, it can indicate economic distress. Higher joblessness leads to reduced consumer spending, which in turn affects corporate earnings. Track unemployment data releases from government sources. Sudden increases could foreshadow economic issues, geopolitical tensions. Finally, heightened geopolitical tensions, whether from military conflicts, trade disputes, or political instability, can lead to uncertainty in the markets. Keep track of major political developments and how they affect investor sentiment. Markets often react negatively to uncertainty, causing volatility. So, what do you do if you suspect a crash is on the horizon? Here are some strategies to consider. Diversify your portfolio. Ensure your investments are spread across various asset classes to mitigate risks. A good starting point is a mix of stocks, bonds, and commodities. Focus on quality investments. Invest in companies with strong fundamentals. Look for entities showing consistent earnings and a solid balance sheet. Maintain liquidity. Keep some cash or liquid assets on hand, allowing you to capitalize on opportunities that arise during market downturns. Now that we've covered the indicators to watch for a potential crash, let's focus on what to do in the long term to safeguard and grow your investments. Here are actionable strategies and some company suggestions for 2025. Investing consistently, regardless of market conditions, can help reduce the emotional stress of investing. Consider allocating funds monthly toward dollar-cost averaging. This approach can apply to exchange-traded funds or index funds. After evaluating your current holdings, rebalance your portfolio to maintain an appropriate risk profile. Focus on sectors poised for growth such as technology, renewable energy and healthcare, which are increasingly relevant in today's economy. When considering individual stocks, focus on well-established companies with strong fundamentals. Here are some examples to consider. Apple, known for innovation and a strong ecosystem, continues to show robust revenue growth and customer loyalty. Microsoft, with their strong presence in cloud computing services and enterprise software, is well positioned for continued growth. As a leader in GPUs and AI technology, NVIDIA is at the forefront of the technology revolution, particularly in gaming and data centers. A major player in renewable energy, NextEra is focusing on sustainable energy solutions, making it a strong long-term investment as the world shifts toward green energy. With a diversified portfolio in pharmaceuticals, medical devices, and consumer health products, Johnson & Johnson remains a safe investment choice for stability, even during turbulent times. Finally, staying informed is crucial during volatile times. Regularly follow economic news, market trends, and expert analyses to make better investment decisions. Utilizing resources like financial news websites and market analysis reports can provide valuable insights that inform your strategies. In conclusion, while it's impossible to predict exactly when the stock market will crash, being aware of these key indicators and preparing accordingly can make a significant difference in protecting your investments. Knowing how to react, whether through diversification, focusing on quality, or maintaining liquidity, will help you navigate these uncertain waters. If you found this video helpful, please give it a thumbs up, subscribe for more financial insights, and share your thoughts in the comments below about how you plan to navigate potential economic challenges. Thank you for watching, and stay smart with your investment choices.